We've got a combination of investors here, people who have also had multiple years of running companies that have grown extremely successfully in the country. And I think they've got a lot of knowledge that we're very grateful that you're willing to share with the audience today. And I'm sure people in the audience, you're interested to hear what investors are looking for, and also hear tips from people who have real experience in growing companies, as well as auditing and looking at those companies for how they can improve. So let's just do a round of introductions, and then we'll get into it.
Thanks, Chania. Good afternoon, everyone. My name is Karan Shah. I'm a senior investment associate with Exeo Capital. I have a background in finance, consulting, and audit. And I've been with Exeo for the last 7 years now. At Exeo, I focus on looking for new investment opportunities and supporting our existing portfolio companies, essentially working with our management teams to strengthen and scale those companies. Exeo is a sector-focused private equity investor, investing into mid-market and large-size companies within the FMCG, agri, food, and logistics sectors across sub-Saharan Africa. We have offices in Cape Town and Nairobi, where I'm based here. We have just over $300 million of assets under management, and we've done over 30 investment and exit transactions across sub-Saharan Africa.
My name is Steve Okoth. It's a pleasure to have you here today. I head the tax practice at Bidco, East Africa, the Nairobi office, and also provide leadership for the tax team across the region. We have offices in all the Eastern African countries and also in the Democratic Republic of Congo. So these are our new offices, and I provide leadership for the tax team in this entire region.
Hi, my name's Ashish Patel. I'm the managing partner for Avishka Capital. Set it up in 2019. We are a $200 million credit fund.
Yeah, good afternoon. I'm Conan D'Souza. I've been with VegPro since 1985. VegPro basically works across about 4 or 5 major divisions, and as we go further down, we'll give you more information on those.
Thank you. My name is Vimal Shah. I'm the chairman of Bidco Africa. We're into agribusiness, full value chain from the farm right up to the frying pan. And we manufacture in Kenya, Uganda, Tanzania. We've got plantations. We've got agribusiness. We've got processing and manufacturing in all 3 countries. And we're looking at many more adjacencies in FMCG. So edible oils, fats, soaps, margarines, detergents, drinks, water, sodas, colas, noodles, now into breakfast cereals. And recently we've acquired some companies. And we're on a growth path for Africa. And we believe that the whole of Africa is a good market.
Fabulous, and welcome to all of you. So I'm going to start with talking with the investors here. You've both probably seen hundreds of companies, dozens if not hundreds of companies in your time. And companies out there, you will have spoken to multiple investors. We all know that there's a lot of capital waiting to be deployed. I think the $1 million or maybe multi-million dollar, maybe a few $100,000 question is, what actually gives you confidence as an investor to invest, right? What are the markers of success when you look at a company and you say, okay, yeah, this one, I'm going to go with this one?
Different investors have different mandates, different objectives, different types of businesses they're looking to invest in. From our perspective at Exeo, we look at a few things. So one is the management team and the track record. So how has the business performed, the last 5 years? How has that management team delivered? What have been the key challenges and how have they overcome them? And then second is barriers to entry. So how do they remain competitive? And how do they stand out against competition? Yeah.
And when you say management team, what are you looking for?
Essentially, we're looking for some stability in the management team, so there's not been a lot of high turnover. So at least the guys that are at the top level, the executive officers or heads of department, most of them have been with the company for some time. And they're the ones that have really driven the growth and profitability.
Yeah, makes sense. What about you, Ashish?
So before becoming an investor, I was an operator for a while. We did a tech company called AVG, which was listed on NASDAQ. So we come from a very different angle. We're credit here, by the way, in Africa, but nevertheless, the equation still stays the same. Quality of management teams is really important. Within management teams, we really look for the ability of a team to actually understand the go-to-market strategies, right? So one of the biggest deficits that we see in Africa is that management teams may be strong, but their go-to-markets are reasonably, in general, weak. And therefore, how do you get a product to market is the number one thing that we kind of focus our minds on. Secondly is a very strong product. I think from a product perspective, it's about differentiation, and that kind of encompasses what you're saying about, the competitive landscape, the ability, and very importantly, the ability to price your product, meaning that you don't get commoditized very rapidly. After that, it's actually the ability for that team to raise capital, right? So can that team raise capital in a sustainable way? Because startups need a lot of money these days. It's no longer the $1 or $2 million, but they actually need the $10 or $20 million. And quite frankly, it's thereafter that we really care about the likes of the CFO or whoever else it is, because that's kind of a great problem to have, because when you have money to manage, do you really need that sort of skill set? So we kind of come at these things in a very different way, but we've seen this work in the US, Europe, India, and that's what we're trying to see how much more can we do here.
Yeah, no, that makes sense. And maybe just sticking with you for a little bit. So now you've decided, right, this company's worth investing in. You believe in their management team. They've got a great product. They're going to scale. They're on your portfolio now. And a lot of companies are looking or hoping to scale quite rapidly. And I mean, we had this conversation with my colleagues at McKinsey last week about how for a lot of companies you can get to a level where it's go big or go home, because otherwise, if you make minor step changes, you actually can't get to the scale where your economies of scale are sufficiently there for you to be cost competitive on the market. But to make a big leap takes a lot of confidence from the company, takes a lot of confidence from the investor. And in such situations, whether it's a 2-3x or a 10x growth, in your experience, what have you seen in terms of some of the challenges along the way?
In Africa?
Yeah.
I think the biggest challenge we face is that we have small markets, right? So it is really difficult to create $1 billion business in an economy, for example, Kenya, which has a GDP of 130 billion, right? It's just fact of life. And then we've got into this notional comfort zone of calling Africa, Africa. But it's actually 50 plus countries, and within each country we have 40 plus counties, thousands of rules, zillions of tax laws, all that kind of stuff. So it becomes incredibly challenging to create unicorns or large businesses that can be scaled. There are exceptions, but these exceptions, I think, are, from a tax perspective, it tends to be, kind of littered all over the place. I wouldn't say there's a concentration anywhere. Perhaps I could even be bold enough to say there's more noise than reality. But then there is the exception to the other parts of the industry that we see, the likes of where VegPro and others are operating, where if you address multi-billion-dollar markets, which are much more export-oriented, you can actually scale and build large, valuable businesses. And that's why we're focused on a strategy of pure export base, right? Because that's where we believe you can create large scale, delivering to large impact, which is one of the previous conversations that we've had, in a sustainable way. And then, of course, all this doesn't mean that you don't need all the other stuff that I talked about, which is necessary for scaling, and capital is obviously going to be one of them.
Yeah. And this question of finding new markets, that this is a limited market here, we're seeing that a lot in the accelerator program as well. The companies are approaching us and saying, you know, we're helping them figure out what is the scale of the market in Kenya, but a lot of them are very excited about the potential to export regionally as well as internationally, you know, Europe, the rest of the world. Obviously, it takes a certain type of product and cost competitiveness to be able to achieve that, right, and be successful in exporting to those markets. And maybe I'll come to the two of you you're running very successful businesses that are exporting. And maybe with you, Vimal, I mean, you came to Kenya, or maybe I should say you started your business in 1985, I believe, with your family. 40 years this year, right? Incredible story where you started making soap, and now you have over 40 brands, and you're exporting, and you're also present in multiple countries per your introduction. I mean, for a startup here that has an ambition to export, but also, you know, some of the companies that we're working with, they're also looking to set up their companies in adjacent markets. What would be some of the advice that you might give them?
There is no better time for any startup or any investor to be alive. I think it is right now. I think there's amazing opportunity. There's all these gadgets that we have with AI and whatnot, and information is available on the spot. So I just think that it's an amazing time. But ultimately, I think a lot of times people are playing to the gallery. People come out and say, oh, there's a private equity, whatever, they want this. So they try and tune their program towards what they are going to give me funding based on. And I think that's wrong, totally wrong. Because I think, first of all, it should be, where's the customer? Who is the customer? How much do the customers pay? What is the market? What is the market size? And what's the edge that we have that others don't have? So I just think that as a startup today, it'll be different. But having said that, I think you're asking me if I was younger, right? I think I'd learn that how to get capital, large portions of capital, align it to local execution teams that can really execute very well on world-class standards and put that to work, right? I think that would have been our journey too. And the 40 years what we are today, we could have been there in 15, 10 years, right?
So
you can accelerate.
Assemble an amazing team. That's what you're saying?
Sorry?
You're saying assemble an amazing team?
Team is important. Execution team is non-negotiable. It has to be there. But at the same time, attracting large pools of capital which are aligned to that. Mm-hmm. A lot of, excuse my language, but a lot of the PE funds are very short-termist, right? They're like the one-night stands and say, fine, 3 years, 5 years, we want to exit, get out. I think Africa is a long-term play. It is seriously good for long-term. And if your vision is longer-term, you will be able to do lots of things here. So what if it's taken us 40 years now? Somebody today in our position could do this in 10 years' time with all the tools and the equipment they have. All you need to do is align capital, align proper management, put the systems together. The demand, I mean, let's look at demand side. The demand equation is high. There is demand, there's people. So the question is, this whole excuse that a lot of people have is, oh, government's not right, the leader's not right, this is not right, that's not right. It doesn't affect you in your consumer industry, or if you're a farmer, you're not a farmer, you're an agribusiness, right? You need to have a customer at the end. So if I'm going to farm something, I need to know where is my market. That's how we do it at Bidco, right? What's the customer requirements, and what quality? So I think the thing is not compromising on quality, because one thing that a lot of people do is, oh, it's Africa, so we can compromise on quality. No, you set your standards high, and sometimes, like in the earlier session that we're talking about ESG, E is different from S, and S is different from G. G is governance. Governance is a given. You've got to have governance in your systems. You've got to make sure you know what you're doing, and that's what is important today. But at the same time, it's E, right? Environment friendly. Environment friendly makes economic sense because it actually saves you money. So there's lots of new technologies we can do that with. So S is a social impact. You know, the social impact that you create on jobs, on sustainable jobs, and the definition of sustainability. So to answer your question, if I was existing and if I was born today, I would say let's do it something big. Let's pool a lot of capital, and maybe the right type of capital which has a longer-term view, which has belief in Africa. Half the people who come over here with PE funds from overseas, and I get them so many times, is they don't have any faith in Africa. They don't trust Africa, and that's a big problem. So again, at the same time, African consumer is going to be there, we're going to change, and I think it's amazing. So if I was younger today, I would think that immediately, right now, 3 things. Good standards, good quality, non-negotiable. At the same time, pool large amounts of capital, align it together to say, let's go scale Africa. Because Africa is still, I use the word, it's a virgin market.
Yeah, awesome. So pool multiple sources of capital. And I'm also hearing you say, like, don't compromise on what you want to achieve, because that's what X investor or Y investor is looking for, right? Like, stick with your North Star, pull different people together, make sure your standards are there, and get the right team in place, which is
my third point, I was just getting to it, is the management team. You must have a founder's mentality, and you must have a startup mindset. And I say this twice again, because if you don't have a founder's mentality and if you don't have a startup mindset, you will never scale. If you go and hire a CEO, which we have done in the past, you hire a CEO who is globally the best, they can't do stuff in Africa. So I'm just saying, management teams, very important.
Yeah, super clear. And Conan, for you, so you're running a business that is arguably the biggest exporter of vegetables out of East Africa into EU and UK. And agribusinesses have very different challenges to many other businesses in East Africa, or generally, right? Do you have any particular thoughts on what startups might want to think about in the agri sector as they look to grow, as they look to export?
Right, so first I'd like to start off by saying, when we started VegPro, we had no idea we'd be where we are today. Very much like Vimal over here, we started about 40 years ago, and we had 5 employees. And that included myself, who was driver, sweeper, drop off, all those sort of things. So sometimes when you use the word or the term startup, it tends to convey a slightly different idea or impression of what you really want to do. When VegPro started, it was just, guys, we need to make some money. This is the cheapest way in terms of barriers to entry, obstacles to get into it. French beans, for example, you could buy a 1-ton pickup for 500 shillings, which was 50 cents a kilo. But we worked very hard. And today we've got about 16,000 employees spread around 14 farms in Kenya. I'm not touching Ethiopia, I'm not touching Ghana, I'm not touching across any of those other countries at this point. And as we grew, we found out that this is where there's a niche, or this is where there's a gap. And again, to go back to what Vimal said, what does the customer want? So we were sending beans to the UK or to Europe, and they were doing the packaging there. And the cost of labor was probably 10 to 15 times of what it is in Kenya. So we said, why can't we do it here? So at that time, there existed a company called, a supermarket in the UK called Safeways. And we said, we can do this for you. It took us 4 years to get the approval to pack and label the beans here. But once that started, that gave us access into Tesco's and Marks and Spencer's and Sainsbury's as well.
4 years, that's a very long game.
It took 4 years only because Africa, as he said, but more Kenya was an unknown. Do we know about quality? Do we know how to brush our teeth? Do we know how to do all these sort of things? So you have to jump through so many barriers just to achieve a certain level of recognition. But once we achieve that, we we were able to basically prove, not just to the UK, but to the wider European market, that Kenya has what it takes. And it's not that we were the only ones at the time. There were other horticultural companies. But one of the other tenets of VegPro was to reinvest a minimum of 30% of our income back into the business. So we were always trying to find out what's new, what's changing, how things, what's happening, what are the laws, what are the tariffs, and things like that, which I'll come to a bit later on. And flowers then came next because, flowers is one of those things. Veg, we would compete with Morocco, Guatemala, and you had to achieve a certain price, landed price in the UK to be competitive. Whereas flowers, people didn't really have a price point for it. You buy flowers when somebody is in hospital, you buy flowers when you're going to someone's house for dinner. So nobody was looking at, oh, this costs £5, I'm only going to pay this much. So from that perspective, we then went into flowers, avocados, fruits, and you just keep on thinking. You just keep on thinking. You talk to your customers all the time. You talk to your clients all the time. But I'd just like to sort of end this particular answer by saying we did not think of it as a startup. We just started doing something and tried to do it as best as we could.
Awesome. And, amazing story. I just want to drill down a little bit more on that 4-year journey to actually build that export opportunity. Okay, you're already in the market, but then you were building on that. How much of that was the relationship that you were building versus, what you were selling?
So to start with, there was no actual relationship per se, because we didn't know these people. We were just knocking on doors and saying, give us a chance. You knocked on Tesco's, you knocked on wholesalers, you knocked on all sorts of people to basically, please help me. I wouldn't say we were begging, but at the same time, we knew we had a product that could work. We knew we had something which, once we were given that opportunity, would definitely take off. Finally, somebody at Safeway said, right, let's give it a shot. So the first year, and I know this because I set this up personally, all we did was we sent samples. We would take water samples, make sure that the water is clean, that there's no contaminants in it, send that out to the UK. Once the water is passed fit for use, then we're able to use it to wash vegetables, and then we could send the vegetables. So this whole process took about a year. The next process after that was basically market sampling on the other side, testing, tasting, what sort of feedback are they getting from their buyers, as in the consumers and the retailers. And once they found out that, okay, the consumer likes it, the product is clean, the price is okay, then they gave us our first order. That was the 3rd year. But they still didn't know whether we were able to supply consistently 52 weeks of the year. So what happened next was, okay, we'll start with only 1 ton every 2 weeks, and if you do that, then we'll go to 2 tons every 2 weeks, and so on. And that was the 3rd year. And then the 4th year, basically, things sort of settled down. So that was the 4-year journey.
Yeah, so I'm hearing a lot of patience, a lot of perseverance.
You have to be persistent.
Yeah.
You have to be persistent, yes.
Good takeaway for everyone in the room. And Steve, so coming to you, we've heard a lot about governance over the last few conversations. Vimal raised it, the last panel raised it. I think as companies grow, whether you're trying to provide a reliable product, going from 1 ton to 2 tons, you've got to have an awesome operating system. You've got to have an awesome team running that show. So, based on your experience, having looked at different companies, what are some of the pitfalls that you see, and how can they address that?
The issue with this particular sector, and especially over the past 20 years or so, many of the businesses have been founded by individual founders or families. And then as the growth trajectory begins to peak, and they're doing good, the business is expanding, this is where now the real issues begin to emerge. Governance issues are not thought of or keenly, at the beginning, because there is a lot of trust, probably the initial employees are very trustworthy people. The family is actually the board of directors, and things are discussed at dinner table every day. But this can work up to a certain level. When now it's becoming a major organization with 5,000 employees, 3,000, several units, then that then begins to crumble. And then that's the time when people begin to now concentrate on governance, concentrate on, do we have a board? Is it well constituted? Do we have a good team? Can we expand? And if we are to expand, what do we have to think through? So this is when now even problems like tax problems begin to arise. And then I'm invited with my team to then solve the tax problem. Now, solving tax problems is, of course, it's exciting for tax experts and people who enjoy tax work like us. But for a business owner, for a business manager, it can sometimes be a real pain, especially when you've really just not done things correctly. Your record keeping is very bad, or you've not adopted automation at all, and people are now looking at several years. A lot of expenses are not even backed by support. This becomes very painful during an incident or problems. And so I see no reason. I don't really wear the shoe. I only look at it from an expert point of view. But I see no reason why governance should not be gotten right from day one, or there are things that you can put in place from day one, or before the real time arises, you can actually revise and correct some of these things. There's sufficient expertise and experience in the market as to what to do at every level and what to do to avoid problems, so that you can then now have that confidence to then grow, to expand, to even go to another country, to expand to Uganda, to Tanzania, or push your products to the market with the confidence that you have a proper structure and your governance is properly constituted, your structure is tax efficient and is also efficient for other reasons. You have contracts which protects your businesses, and you really cover the risk. So it is at that particular time, then that's when people begin to rush. There is also another incident of people working hard to improve their governance when they want to invite additional capital or additional investment in the business. But that normally is not really the best time. The best time is to do these right things when you have comfort and there is no deadlines or pressure.
Yeah. So get your governance in order, get your house in order. Otherwise, other elements of your business start falling apart, including tax liabilities. And Karen, when you look at companies, or actually when you've invested in companies, do you help them think through their governance, and are there other things as well as an investor that you help companies with to make sure that they're set on the right path to build returns, right?
Yeah, indeed. As Vimal said, we have a very short time horizon. Not the 3 to 5 years, but around 6 to 8 years, but still. So we really need to maximize that shareholder value in that time. So beyond the capital, we do focus on a number of areas to create that value and help the business scale in a structured and sustainable way. One of them is, a key one is strengthening governance and strengthening the management team. And Steve just talked about all the reasons why that's important. But essentially, it's to get the business to run more like a well-oiled machine. Okay, minimize the operational leakages and losses, and even sometimes fraud that can happen when a business gets to scale. What you find is, of course, managing a business that has 100 employees versus managing a business that has over 500 employees requires a completely different management style and systems. So also ensuring we put in SOPs and systems in place to minimize that. And then the third element is, and this is because we also tend to invest and support a lot of family-owned businesses or founder-led and managed businesses, The governance and institutionalization of the business and strengthening of the management team also helps these active founders transition to a more strategic role where they can add better value. So beyond strengthening governance and management, we look at a few key areas. We look at many, but just give a few of our top ones. So one is on the strategy, making sure we aligned and refine the strategy with management, at least the strategic goals for the next 3 to 5 years, and implement a system to implement the strategic goals. So we like to use the balanced scorecard approach, which cascades your strategic goals across the departments. It sets KPIs for your management and helps develop a performance-driven culture. Next is operational excellence. So how do we get this business to achieve best in class with its peers internationally and also regionally? How do we get it to operate efficiently? We like to use Kaizen and continuous improvement. We've seen big rewards when that's been implemented successfully. One of our floriculture businesses managed to, for example, double its yield on the same acreage without any major capital investment, just by adopting Kaizen. Lastly is more so for manufacturing businesses, is on capital expenditure. So normally when we come in, a business has a big growth plan ahead, they want to invest heavily into some CapEx. What we've seen happen, often the case in East Africa, but no less common rest of the world, is huge cost overruns. You go over budget, your capital expenditure plan is delayed, and sometimes you end up with equipment that's inadequate or you didn't really need and didn't really fit your strategy. So what we've started doing now is, so we have a team of manufacturing experts that we bring in, really help review that capital expenditure plan, ensure it aligns well with the strategy, and minimizes those risks for cost overruns, because that can really hurt the returns.
Yeah, okay. And I'm also kind of thinking it's a long-term partnership, right? Well, maybe in your mind short-term, but 5 to 7 years, I think you said. It's a real partnership with the company. And so again, it comes to the point of make sure that the investor is very much aligned with the direction that you want to go in. I'm also hearing a lot of issues along the way. You mentioned fraud. You mentioned also on the kind of manufacturing capital excellence side, like redundant machinery and cost overruns and so on. Maybe just a quick one on the fraud. And maybe just to say before I go there, fantastic that you're able to help companies in that journey, right? That's an incredible contribution to the partnership. And obviously it's important for both parties. Otherwise, you're not able to deliver those returns. But I'm just really curious, on the fraud one, what type of things do you see?
I'm sure many people can relate, especially Vimal and Conan, and many others who have run businesses here. I think fraud risks in East Africa, probably also the rest of Africa, are quite high. We've seen various incidents. For example, some members of staff may have another firm that's providing services to the company at an inflated rate, and therefore taking money out, and probably also not effective. Credit collection fraud. And that's more in places like Tanzania and Uganda, where cash collection is still a big thing, and payments in cash is a big thing. So basically, your credit collector has collected payments from the customer, but has pocketed instead of putting in the business, right? And then those customer debts keep building up. There are many incidents.
Yeah, exactly. And I think these are all stories that we've heard before, right? And again, it comes back to, have you got the right team in place that's overseeing this? Have you got the right governance? Have you got the right checks and balances in terms of your accounting and so on? And maybe to come back to you, Steve, what kind of major pitfalls have you seen that are more specific to the agri space?
Yeah, there are basic things that can be done in the agribusiness space, especially in the agri-manufacturing or even in consolidated enterprises where there is an actual agricultural or component to the business, and then there is a manufacturing aspect or to the business. That is very common for export-oriented businesses. Actually, it's the simple stuff. If you look at record keeping and automation, is record keeping really helps in managing the business from a risk management perspective, to keep the records, to maintain the records, and to automate as much as possible is something that these particular sectors really can do well with. There seems to be a reason why people are not comfortable with automating in these sectors. I really do not understand it could be business culture, or it could be some other issue, but most industries, especially in Kenya, most manufacturers especially, have really gone ahead and put in automation and proper structures and proper systems. But this space, this remains to be a gap. And it's an area that really needs a lot of improvement. Or even for transparency perspective, if you are the CEO and you want to see everything, it will be much, much better if you automate as much as possible. You have that information transparency, you can analyze it. I would say record keeping and automation is an area that needs to be really improved on. Besides the other more complex aspects of supporting governance, for example, monitoring regularly, or how you are managing risks, like risks of fraud, tax compliance risks. You continuously have a system where you say every year we are going to do a review. We have an internal audit process that takes place every single year. It's either internal or there is an external support to that particular function. So it's this basic stuff that really cause problems. From where I sit, I see no reason why they should not be taken seriously and action actually taken into it. But there could be something cultural about these particular sectors.
Yeah, automate. And I think there's so many different software options available now that are so much cheaper than they were even 10 years ago, right? And that are accessible to different startups, or to startups in general. And there's also AI which can help you automate not necessarily your accounts, but other things to just improve your efficiency in general.
So I think one of the reasons why we've had a challenge with automating in the agribusiness is if you're within the city, for example, we have a pack house at Jomo Kenyatta Airport, that's automated. From the time we receive the raw material until it goes out of the door, the raw material is weighed, packed, everything is automated. But on the farms, it becomes very difficult to do this. And the reasons are both practical and, to some extent, skill-wise. We don't have bandwidth in terms of Safaricom or whatnot in a lot of the areas that we operate. So to actually have some of these gadgets working on the farm and picking up data on a live basis, you have to trust people to manually record it and then upload it. That's not very accurate all the time. And the second reason that this doesn't work is that farming or agriculture, as the farmers amongst you will know, is a 24-hour, 7-day, 365-day business. With most manufacturing, you can start your machine or your factory on Monday and close on Friday. We can do the same thing, but on Saturday and Sunday, we'll come back and we'll find that the raspberries have produced more, or the flowers have produced more and whatnot. So to have somebody doing that, or to have something doing that on a live basis all the time is where the challenge is. Now, that's not to say that we're not working on it. With drones, we are trying to experiment with drone technology, and it's helped us to a certain extent. We're also trying to work with gadgets powered by solar, and just trying to see how that can help as well. But also, it kind of introduces one more thing to look after, or one more thing which can go wrong to monitor. And at this point in time, we haven't found that the expense or the time spent on that at the rural or the farm levels is commercially viable. Maybe as the cost of technology drops, or Safaricom or Airtel is able to extend or penetrate further into Kenya, it might work on a more reliable basis. But that's one of the challenges we've had as a growing company.
Yeah, super interesting, and thanks for sharing. I think I'm going to end with some tips, maybe from Vimal and Ashish, please. Vimal, if you knew what you know now, 40 years ago, out of everything, what would be the top few tips that you would like to give?
Fast forward 40 years and backtrack. But I think the important thing is that, first and foremost, operate at global standards. Operating at, whether it's ISO 9000, 14,000, 18,000, 22,000, must become a given, right? So operate at those standards. Once you've got that, we do Kaizen, you do Global Compact, you're a member of everything, and you really reach those levels. The minute you do that today, we started off late, right? After 20, 30 years or whatever. But then now today we're there. If you start off today, get all those certifications, because same thing in flowers, fair trade certification and certification for silver, whatever. Get those things. What happens, the customer will start trusting you. The 4 years that they took to get certification or getting approval becomes automatic instantly. So I just think that's one thing. Second thing is technology. Technology does not only mean AI and in internet. There's technology in agriculture, there's technology in production, there's technology in Kaizen, in doing so many things so much more faster. And of course, partnerships, smart partnerships. What I know now is that smart partnerships today can leapfrog us straight away, rather than say, I'll do it all on my own, We do it all on our own, you still, hit the bank, and whatever profits you make, you start investing that. If we could get that together, pool capital together and say, fine, let's make it happen, I think today, I would say we can scale up much more faster. Having said all this, standards is one thing, but technology, not being shy from it, use the latest, and I think it's available. It's at a lower cost. In fact, it's getting better, because now there's no CapEx. All technology is all OpEx, right? There's no CapEx that you have to pay large amounts for servers and all that stuff. Just go to the cloud and get it all done. Number 3, capital. A lot of capital is not the same. You go to the bank, or you go to PE funds, you go to venture capital, you go to various people, it is all different. And I think this important thing is that capital comes with its own wings. And you've got to make sure what capital you're attracting for what you're doing. And again, being authentic. I think important thing is that we don't have to have, sorry Steve, we don't have to have auditors checking on us. We've got to make sure we've got all our books right. And if you really want to do things right, do not go anything under the table. Go officially, go and computerize everything. That was a culture. A lot of people said, Kitu Kidogo, I put on the side. I don't declare my entire income and put it away because that's going to help me in cash flow. Don't do that, because that is very short term. And unless you're a founder who's going to run this shop every day, you will stay there. And when you want to grow bigger, you've got to delegate. And when you delegate, you can't tell them, put down something for me on the side. So I think the important thing is you can then computerize. And then you just unleash yourself from old school. 40 years ago, it was old school. When we went to the office, there was no phones, there was no mobile phones. We had to go for our messages. We had telexes, and we had typewriters, and we used to send mails and snail mail. Today it's instant. So I just think that with the technology today, amazing space to be in.
Awesome, thanks Vimal. So get your standards sorted, get your tech sorted, and make sure your kind of accounting and so forth is in order, do everything above board, automate. Awesome. Ashish?
He said it all. I'll pick up on Vimal's previous idea. I think what I would say is make sure you have a very robust business model that you've thought through, right? And we continue to fall foul of where we develop a business model and then look for a problem to solve. That's not the way to do startups. The startup has to, or any scaling business has to solve, and I think Karan referred to it in terms of he was solving the issue of Sainsbury's or Tesco's or whoever. Vimal's solving an issue of whoever his customer is. Secondly, whatever you do, think about scaling from technology to people, and I think I kind of give people the priority here because investors always have this notion that they can add value. Investors cannot add value in an operating business. The operators add value. The investors can guide. And I think that's the biggest myth, where you think that you can go in as an investor and then run the business. You can't do both. You've got to decide what you want to do, but you've got to pick the right entrepreneurs. And I think he used the right word, an entrepreneurial founder's mindset, right? So you've got to motivate people correctly. Just adding to Conan's one point around technology absorption in Africa is extremely poor. Despite us thinking Kenya is extremely computer literate or Tanzania is computer literate, the reality is we know how to use M-Pesa. But the general use of technology is still low, and that's because the cost of technology is high. It's cheaper to get a Microsoft license in India than it is in Kenya. Why? Right? It is cheaper to get a CRM system out of India than it is in Kenya. Why? And it's by multiple. It's free to transfer money in India between point A to point B, whilst Safaricom doesn't charge as much, you think, but actually as a percentage of the amount that you send, it's quite high. And this all affects the growth and the scalability of a business, because these are costs or indirect taxes or whatever you want to call it that happens. So I think you need to take a holistic view on this, but I would say stay true to your business model and let the investors come to you based on your business model, not to turn it around, and people.
Yeah, thank you so much, Ashish. And I'd like to say thank you to all the panelists. I think we'll, give a round of applause, please. Thank you so much.